I find myself whistling to that guitar riff. Now, Monday, February 6th, market call. Guy Adami, Dan Nathan, literally in seconds. Carter, Braxton Worth, Dan of Worth Charting will be joining us. Today's episode is brought to you by FactSet Financial Data and Analytics, Dan, that are powered by tomorrow. FactSet, of course, our data provider. And Dan, we have a big event coming in, the 3 E's, as they say, that we're all jazzed up about. We have a few hundred people signed up, and we're hoping to get a few hundred more before the end of this pod, or what do we call the show? It's not a podcast.
It's called a podcast show. Yeah. So on Wednesday, it's at 10:30 a.m. Is that correct? 10:30
it was 11 a.m.
Oh, 11 a.m. Sorry about that. Well, here, hey, throw that thing in the ticker here. Let's just do that. Let's get that ticker up. We're doing it with FactSet, and we have 3 of their very fine experts joining us to kind of give their 2023 outlooks. So do us a favor here. Take a look at that link. Sign up for it. You are going to get a special dedicated link for this event. And Guy and I are going to walk through some important topics. Earnings with Butters. We're doing it, Guy. We're doing earnings with Butters for 2023, and we're hitting ESG, we're hitting energy. These are 3 really important parts, I think, themes in the markets in 2023. All right, you're rocking a little Travis Bickle look there.
Like
it looks like.
Hold on,
anybody?
Hold on.
What,
maybe
the
I gotta
hair?
push
It's
down
the
my
hair
screen a little bit.
And the shirt.
So this is my post Grammys look. What do they call that guy? Khaled, DJ Khaled.
DJ Khaled, yeah. Yeah, he's your guy. All right, let's get into this thing because, listen, I don't think we've been on. We had our On the Tape podcast drop on Friday, but we did not cover that jobs report. And it's kind of interesting. I mean, I think we had a very animated market call on Thursday. I think you and I were both a bit perplexed because, I mean, the idea that the Fed would let like risk asset bubbles kind of reflate just is both confounding and stupid to you and me. J-Pow speaks tomorrow. This is, 2 trading days after that jobs report. That's an unemployment rate back to levels we haven't seen since 1969. And it's really complicating the Fed's job. And I just say this, Guy, before I pass it over to you. I mean, you've thought that they've done a pretty decent job of staying pat on that hawkish sort of tone. What the hell happened on Wednesday afternoon? Because listen, stocks raging and the sorts of stocks that are raging right now, right, are not particularly bullish, the sort of activity we're seeing. So do you think he takes tomorrow opportunity to clarify it? And then all week long, we have a lot of Fed speak.
I thought he had a huge opportunity to do it last week, given the rally we had seen into that. And he took that opportunity to mention the word disinflation. I want to say 13 times. So I'm seeing other people say 11. Doesn't matter. The point is, he had a real opportunity. He didn't take advantage of it. But something happened on Friday. And I'm not really convinced. I'm not sure what it was, but you saw the price action. You saw the early morning rip in equities. Then you saw the subsequent sell-off, and that coincided with the ridiculous move in the bond market. I only bring it up because Friday felt like one of those days where somebody or some hedge fund or some group of funds sort of got blown up, and that might come to light in the next couple of days or the next couple of weeks. But the price action we saw on Friday, really, as odd as it was earlier in the week, Friday's action equally defied logic, just in terms of the magnitudes of some of the moves. So we'll see. But that's the environment that we find ourselves in. People have gotten themselves a bit off sides without question. We talked at length about that on Thursday, how we felt, we used the word perplexed and somewhat confused, but we weren't going to really stray that much from our thesis. And here we are today in the aftermath of, not particularly great price action on Friday. And we're going to talk about this as the yield curve continues to invert. Just a lot of things that we've been talking about are continuing to come to fruition.
Yeah, well, I guess the one thing, though, that, after being pretty right for all the right reasons from mid-2021 till really the end of last year and changing our tune a little bit from a trading standpoint, I mean, to be, wrong just as it relates to equities. And that's the major thing I think that you and I are both kind of stuck with, because on the commodity front, on the rate front, on the currency front, on many others, I think we're still, our views are being confirmed here. It's just this pesky little stock market. Before we get to Carter, I just want to hit this one slide here. And these were 3 stories I read over the weekend, and it really speaks to a different time period in the market, what's going on here. If they can throw this slide up here, I think this got widely shared. The 25-year-old trader amassed $1.5 million. Then he lost it all, and now he's like stocking shelves, in a convenience store. The rush into meme stocks, 0 day, these 0 day options. I mean, it's just like gambling. I mean, that's all that's going on here. And then on Thursday, the day after that Fed meeting, it was the largest 1 day options volume, and calls were like 40 million. They're like 2/3 of all the options. So we're getting back to the kind of YOLO sort of behavior guy that to us in 2021, specifically early 2020, gave us really conviction that we were in the end game for that kind of bull market.
When you see headlines like this, it clearly suggests, we're not, well, I mean, it's not what you typically see at bottoms. Let's put it that way. It's typically more of the type of things you see at tops of these cycles. And to your point, a lot of this stuff seems to be rehashing things that we saw 12, 13 or so months ago, which I find to be somewhat interesting. Real quick, I want to give Jim a shout out, who apparently is in the hospital. Jim, feel better. Dan and I, obviously Carter as well, thinking about you. But, it speaks to a lot of just sort of the frivolity around the market again, and sort of the animal spirits taking hold against a backdrop that's less than encouraging. And, this options trading breaks daily record, and these 0 day options, I can't put my finger on it. I don't understand it all that well, but I got to tell you something. These seem to be the types of things that work, and I'm not trying to be glib here, until they don't. The problem is, of course, when they don't, something breaks. And clearly that's what I think we might be on the precipice of.
Yeah, I'd just say this, we talked about we talked about using futures and some of the E-minis. I mean, if you want to speculate during the day on the direction of the market, I mean, literally, you're just like going like this here. And again, you have to be staring like we do at our FactSet machines all day long and looking at the news and thinking that you have an edge. And again, I mean, some people will tell you and Carter will come on and tell us in a second. I mean, there's no edge to doing that. It really is kind of gambling. And one of the reasons I mentioned using the E-minis and the futures, at least you can set really tight stops. The idea when you buy an option that is expiring at the end of the day, you're paying a premium for that. It's much worse odds than a coin flip. So I'll just make that point. All right, listen, we got a lot of stuff to cover here, guy. Let's hit the major indices, but let's first bring in the aforementioned Carter Braxton Worth of Worth Charting. Carter,
I love the aforementioned.
Yeah, hey, but talk to us a little bit before we hit the S&P, the NASDAQ. We're going to hit yields, and then you want to cover. You had a nice call on the dollar playing for a bounce. So we're going to look at that again, and then we're going to look at gold here, and then. But I just want to get your thoughts on like the sentiment. You saw some of those headlines. You saw what we were just talking about here. It's just it feels like it's all coming back, and it's all coming back at a very different time than when it was around the last time. Because in Q1 of 2021, 2 years ago, rates were at zero. You know what I mean? And here we are, Fed funds at the March meeting. If you look at the CME Fed Watch tool, we're going to be at 5%, okay, in the upper bound here. And these sorts of headlines after the rip that we've had in the major indices, they just don't make me feel particularly good about the for the potential for this thing to continue to rally. Thoughts on just some of from a qualitative standpoint?
Yeah, I mean, if you think about we're all prone, at least I can speak for myself, to see a prospective move ahead, right? A direction. This one's gonna plunge. This one's gonna surge. This is gonna break out. This one's gonna bounce here. And so too it is for equities as an asset class. And it's because basically things don't stand still, right? Equilibrium exists, but it doesn't persist. At some point, something is either improving, just like in life, or it's getting worse. Your health, your job, your relationships, whatever it might be. And so too it is with the market. The market is basically stuck. I mean, we are essentially, for what it can be said, we're the same price we were exactly 2 years ago. And the market has been, from 2 years ago, 15% higher. It's been 15% lower on the October lows, and we're unch. And it's trying to figure out, and that's what really we're discussing here. And is this the beginning of a new constructive bullish phase for equities? Or is the trouble of the past 13 months still with us, and that this is just a bounce in an ongoing period of trouble? And my gosh, you guys feature some of the greatest experts in markets at the highest levels, at some of the biggest brokerage firms in the world, as well as buy-side players, and you can see the discord. There are a lot of very bullish people and a lot of very bearish. I myself think it's probably going lower, but every day that it doesn't, you have to question that. The real thing is that when you have a market that's chopping, it affords an opportunity to win with your stock selection, right? Because in periods of great duress, correlations go to 1, everything sinks together, everything rebounds off the COVID low together. But now you should get the dispersion, and you are getting it.
You do a great job of taking emotion out of the equation, Carter, which I've always struggled with, but I think I do a relatively good job. But again, when you do that, things become a lot clearer. And is anything to that thesis that you've put out, the downside thesis, has anything changed? Because you mentioned the longer things stay, you didn't use the word bid, but the longer things stay sort of firm, at a certain point, the more self-fulfilling it becomes. Can you speak to that?
Well, that's right. So it is just a money flow thing at the end of the day. And so I think the thing to watch let me just say this, at any given time, certain stocks provide no wisdom. What Walmart does the next 5 or 10% up or down, there's no information in that. DuPont, there's no information in that. Ford Motor's been chopping around. But there is a lot of information in the following, and we can use these names as a control mechanism for the whole market. The very speculative things that have come roaring to life, ARC, and Peloton, and Zoom, and DocuSign, and Carvana, and Wayfair, and Bitcoin. If those can hold and continue higher, there's a message. And if it has those falter, that's my thinking. They give back these great gains. There's a message. There's no message in Walmart right now, and there's no message in Ford. So I would watch the speculative end of the market, and that will give us clues as to whether this is going to be more enduring or whether it's just that, another moment of aggressive money flow into the most speculative things only for naught.
All right, so let's hit what's meant to be the less speculative. If you think about it, the S&P 500, 25% of those 6 largest mega cap tech stocks. We've been drawing the line for basically over a year. We've seen that downtrend. We see the downward sloping 200-day, or you like to use the 150-day. The S&P never made a new low, right? So off of its December highs here, and I guess that might be the one constructive thing about this chart, other than the fact that it just broke that downtrend. Guy, thoughts here? Because to your point, you could have a back and fill, you could have a few percent back on the S&P. Things can start to feel a little crappy because some of the more speculative names, let's say the S&P is down 3%, it's back retesting that 3950 level, the 200-day, and some of those other names, if they don't show the sort of relative strength that might cause Carter or some of us to change our minds, they're going to be down a lot more. But is that the level? I mean, and maybe Carter can speak to it, because I feel like we have a retest coming of that downtrend, and that's going to be the moment of truth.
Well, it's interesting, a retest on time decay, and Carter can really speak to this a lot more intelligently than I, but a retest of that downtrend effectively is going to be a retest or a test of the uptrend as well, with the thing of time decay. So each passing day, we get closer and closer to that pennant forming that tip. And then we're going to have this day of reckoning, I think. And, we've seen false breakouts before. We've seen false breakdowns before. I think the question you have to ask yourself, and, maybe Carter can sort of illuminate here a little bit, is that what we're seeing now? Was this little move over the last week and a half a false breakout? And if, in fact, using that time decay that I talked about, getting us to the point of that pennant, what happens if, in fact, that downtrend line gets violated at the same time the uptrend line gets violated, Carter?
I mean, you're touching on all the key elements of the current circumstance that is the S&P 500. And really, it's the market. Remember, the market is a muted picture because there's stocks that are making new 52-week lows right now, big, heavy names. And yet, how is the market up? Because you've got this huge influence both at the speculative end of the market, but also, to be fair, Google and Apple and others have come to life. To go higher from here is basically subscribing to something of a V, and Vs are rare. I do think if we're going to go higher, that higher prices pass through a lower level, and so it would be a check back, a test of the downtrend line, and a reassertion of strength at that line. I don't see it. I think it's a better short here than a buy with new money right now.
All right, so Carter, let's look at the NDX here, the NASDAQ 100, and again, those same 5 or 6 names. also make a disproportionate amount of this index, but it makes up nearly 40 or so percent. And what's interesting about the NDX here is obviously it's the same condition as through the moving average, through the downtrend, but what it rallied off of was basically a retest of the October lows, right? So the S&P benefited from the rotation, right, in the fall into cyclicals, into industrials, into some energy names, into staples, that sort of thing. But what does it mean to you that the NDX was powered by some of these mega cap names? We've seen the outperformance in those over the last, let's call it, month and a half or so. Does this chart mean anything different than the S&P 500, despite the fact that some of the major components are the same?
No, it's the same sequencing, other than it's much weaker up and until the strength of the past 5-7 weeks, right? We know that all equities have a low in the summer, spring, summer, June. All equities, as measured by the major aggregates, make new lows in October and then go straight up from the October low, whereas the NASDAQ goes on and tests, i.e. went back to the October low. Really poor relative performance, and now come to life in a big way. Here too, at any given moment, you have to make a decision. Are you buying or selling? I'm selling this fairly steep, uncorrected 7-8 week advance.
Yeah. Hey, all right, so let's move to rates here, because I think, one of the things that if you look at the 10-year, if we were to see, we saw this bounce, it got to what, 3.5. Here we are at like 3.65 or something like that. And, it nearly touched that rising 200-day here. It looks like pretty decent support. We just drew that 3.5 levels psychologically, but you see that downtrend. Guy, what does this mean to you? If we were to if we saw yields and the 10-year, which we've thought has been reflective of the expectations for growth or decelerating growth, if we were to see this thing break out again, I mean, is that the impetus to cause the NASDAQ in particular, because of the valuation of so many of those components, to come in hard?
There's so many things. I mean, we could spend an hour just talking about rates, yield curve, what it means. I'll say this, again, I think to a large part, 10-year yields going down took away some of the headwinds for these larger growth, high valuation, high growth names. And we saw it in terms of how the stocks move. NVIDIA's proof positive. There are other names as well. I mean, we've just seen parabolic move in a lot of these names. I think to a large extent on the back of 10-year yields going lower. Now you've just said it, 10-year yields are now headed back higher. So it's clearly not suggestive of economic growth. I mean, without question, I think we would all agree that economic growth is not the driver of 10-year yields going higher. So I would say by definition, if these 10-year yields going lower prove to be a bit of a tailwind for these stocks, the same should be true. If they start to go back up in terms of yields, they should provide a bit of a headwind and people should be cautious. But I'll say this as well, and we're going to look at this again. The moves in the bond markets we've seen over the last, couple sessions, we're back to the volatility we saw in the bond market, 12, 13 or so months ago that we were seemingly talking about every day, which again, getting back to an earlier point, is not suggestive of a market bottom at all, Dan.
Yeah. Carter, thoughts on the technicals here? And again, is there, like, when you look at this, fine, the support, it's not really there. It's maybe just that kind of rising moving average. But what would it mean to you? I mean, if it were to get above that downtrend, and again, there's only 2 points there, is it making a straight shot for 4%?
Yeah, we're getting sort of dollar strength, obviously, and a bump up in yields. Bigger bump up in the 2-year than the 10, which is to say the 2-10 spread is now at 81 basis points and ultimately probably going to get as much as 100. I don't think there's any great trade in the TLT. I'm, recommending long TY1, which is the futures TLT, and shy, but that trade, which has been good, is under some pressure.
Yeah. All right. Well, thanks for that. Real quickly here, I just wanted to hit this because I detailed a bearish trade in the FXI in February expiration a few weeks ago. It was going against me. Now it's kind of coming back my way here. And it's interesting. If you were to look at crude, and we have a chart here, just a 1 year, and, it had that kind of nice bounce in December, then gave a lot of it back, and then made a new little high there earlier or late last month here. And it really looks like death. I mean, when you think about this, and then if you look at copper, had that really big parabolic move after China pivoted from the when I say parabolic, I mean whatever.
You definitely had a big move to
yeah,
the upside.
you had a big move, but they're coming back in here, and I feel like the excitement guy around this China reopening has kind of abated a little bit, especially at a time I think is interesting that some of the data out of Europe, as far as their economy, like collectively, wasn't as bad as people thought. So I don't know. I wonder if there's just too much juice in the China reopening trade. And what are these two charts telling you? Just looking at the price action, because if crude were to make a new 52-week low, I mean, I don't know, man. That might be something like a little bell going off about expected growth for the balance of the year.
Yeah, I mean, I think a lot of market participants would say this is extraordinarily bullish. Input costs are going down. The Fed is winning. I totally get it, and to a certain extent, that's absolutely true. I mean, that's what they've wanted all along, right? Input costs go down. Hopefully, put a kibosh on inflation. Understood. It's also one of the reasons these things are going lower, in my opinion, is exactly what you just illustrated. Maybe these economies and maybe the global economy is not nearly as robust as we had hoped it would have been vis-a-vis time, and then obviously this China reopening. So what does it mean for equities? Again, the backdrop is not constructive. It's headwinds at the least, if not more structural things going on. So again, crude going down, I understand why people would think that's a positive thing. I totally get it. I think all the things that you just outlined and some other things as well just mean growth is slowing. And what do you pay for slowing growth in a rising interest rate environment? And again, I don't think to me, that's not supportive of the evaluations we're seeing in the equity market.
Well, the other point is with that jobs data on Friday and all the upward pressure we have on wages right now, I mean, that is that stagflationary combination, if you think about it in one word. But Carter, you had a great note out, I think it was about a week ago, and we covered it on Market Call, but you sent it out to clients on Worth Charting about the dollar. And you were saying, let's do this thing. You know what I mean? Like you said that you thought it was ready for a bounce. We've had a pretty sharp bounce. Talk to us on the dollar, because that's obviously having an impact on the crude that we just threw up there, I think. And then you want to talk about gold too.
Yeah, it's impacting crude, surely. It's again happening at the same time that rates bumping up. It's having an impact on copper and so forth. Yeah, here's the dollar chart, and the 101 level is what was cited back in September as the place to flip around and try for a long. Let's put some lines in. The lines draw themselves. It's very precise. Put some arrows in. We've moved above the downtrend line. Now, in many ways, it's anybody's guess how high we can go. I'm sort of looking at 107, which is where the 150-day moving average will come into play, plus or minus. And so were we to get as high as that, there's every expectation that gold will be lower, and prospectively rates higher. So here's a Jan 13th note to trim gold, where your annotation is there. And if we put in some lines, gold went higher, to be fair, but it's playing out. And how low can it go? The next iteration is my guess. One more iteration, if you put in some lines, I think that we're going to check back. We've broken trend, and that we can get as low as 1800, which, while that seems like a lot, here we are at 1860, it's not that much, and it can happen quickly. And it would be a perfectly normal, if you can use that word in this business, move given the prospective strength in the dollar.
Yeah, and you wonder what's the backdrop for that. I mean, continued dollar strength, yields moving higher, gold moving lower. It makes sense without question. And you got to ask yourself what the catalyst is. Is the catalyst maybe, again, more hawkish rhetoric out of this? We weren't hawkish. Wait a second. Maybe you didn't hear us clearly last week. This is what we're doing. So it's all clearly out there. And again, I said this on an earlier show, Dan, I'll say it to you. And this is not, again, backing away from anything, but there have been people a lot smarter than I am, which is not a high bar, that have said this is some of the most confusing market / macroeconomic backdrops they've seen in their careers. And I will tell you the last 6 months clearly, but the last month and a half, I mean, there's so many cross currents. There's if you're bullish, there's enough for you. If you're bearish, there's enough for you. And the battle lines are right here in a number of asset classes.
Matter of fact. All right, Carter Worth of Worth Charting, thank you for being with us on a Monday. We will see you again on Wednesday. You're also going to be on the desk on Fast Money tonight, so
no
can't
way.
wait for that. Thanks, CB Dubs. We'll see you, man.
There. Bye.
All right. Guy Adami, we just spent a lot of time talking about what the Fed said, what investors thought they interpreted. We went through some big macro charts. Let's talk about earnings, because there's still a whole heck of a lot of them to come out. And I think, again, it's always interesting to see how stocks react to earnings and guidance early in the cycle. Doesn't it seem like months ago when the banks reported, when they got this whole season kicked off, and then we had that huge move out of Netflix. So that was one of the first tech ones. But there's some stuff this week that are really interesting. So maybe they can throw that slide up and give us a sense for, there's we know that Electronic Arts had bad results in guidance, and that stock got hit really hard. So tonight we have Activision and we have Take-Two. We also have Pinterest, and then Chipotle tomorrow, Chipotle, whatever you want to call it. Disney and Uber will be really interesting. Our friends over there at CME, that is a stock that I'm long. And then PayPal and Pepsi later on in the week. Let's talk about this Pinterest, because here's one that if we pull up this 1-year chart, Guy, it's kind of interesting. And you were actually bullish of this thing. I remember last summer, and it never made a new low in the fall with the NASDAQ, which was kind of interesting here. And we have a chart. I mean, the implied move in either direction is 13.5%. So it churned last summer, but look at how it's just kind of had this little step function higher here. A lot of consolidating action. Is this a name you find interesting, or do you wait one way or another? Because listen, it's flipping a coin. You want to play for a meta sort of move. You know what I mean? Fine. But if you get the direction wrong, your lights out. Okay. And then the idea that, if it were to go down, let's say 10%, that might give you a good opportunity down near that moving average to buy it.
So I'll answer your question. I do think there's an upward trade here. I think, if I'm not mistaken, around the time that we started getting bullish on it, we started to see some activist chatter in the name as well. That seemingly put a bit of a floor in this thing. To your point, that implied move gets you right to the 200-day moving average. So the smart thing to do would just be wait and see. I mean, we've seen before. I mean, you saw it in Snapchat, a stock that had a pretty big move to the upside, only to give the entire thing back. I just happen to think Pinterest is just a better company and a better positioned company. And I might prove to be wrong, but I think that move might get you that next leg higher. So this is one that I'm clearly watching. I think it's a fun one to trade around, right, understanding it's a $100 table. But I'll tell you, I think the most interesting one out of the bunch this week is Disney, given the pretty significant move it's had from the lows, predicated on pretty much nothing other than the broader market. Yeah. You have to wonder, what rabbit are they going to pull out of their hat given the bounce that stock is seeing?
Yeah, we're going to preview that on Wednesday. I'm definitely going to be putting a trade on in that one. I think we probably come back. Throw up that Pinterest chart, though, guys, one more time. And what's interesting, and I just kind of want to break this down, when we talk about what an implied move in the options market, I said $3.75. The stock's trading around 28. If you took the at-the-money straddle, that's the call and the put, and you put that premium together on the weeklies, that gets you about 3.75. So if you were just to buy the stock here at 28 because you thought the stock could rally 10%, you basically have a nearly $3 target to the upside, okay? But on the flip side is you're also probably risking about $3, right? So if you wanted to say to yourself, all right, I want to define my risk, and I want to use options, and I could buy that at the money call, and maybe that costs about $1.80. So I'm risking less than the implied move, but you need a big move in a short period of time. You got to get that direction right here. And that's why it's just kind of hard. And if you think everything we just said about the market, where we think we are, if you feel that or share that sort of sentiment, then it makes sense to wait for some of these stocks to come back your way. And here's a good example. Throw up the snap chart that we have right here, okay? I was long some puts into this thing. This was last Monday into the print, okay? And you know what? I thought the stock had run up, and I thought it would give some of it back. And it went to 10. It got below that in the aftermarket, and I had a small winner, okay, because I was long the at-the-money puts. It's a really hard game, people. Now look at this thing. It's back up to where it was, right? Filled in the entire gap, and now it's at resistance. You see that 200-day moving average? I mean, that's a chart that you kind of want to buy. It shook off. It shook off the bad news. Maybe there's enough bad news in it. Analysts hate this stock. There's like 5 analysts out of 40 that rated to buy, that sort of thing. Thoughts on Snap, Guy? Because I heard what you just said versus Pinterest, but this price action is not bad in a week.
No, it's exactly what you want to see as well. And essentially, I'm reading some comments, Pinterest and Snap they're not indicative of anything. Yeah, I think we understand that. We're just trying to point out trading opportunities and names that have some catalysts around them. But that price action in Snap is everything you want to see. And when you see it shake off news like that, obviously, I think the Facebook quarter clearly helped, right? You probably you shook out any shorts that were in the name. This is a stock that, racing around the bottom, had a big volume day, felt like capitulation last week on earnings. The set appears where it can move 35, 40%, still be a broken stock without question, but those are the type of opportunities you're looking for without question. So that's why we highlight these things. But to answer your question, that price action, if you're bullish, is exactly what you wanted to see.
Yeah, and our main man, Eric Lancelotti, he's saying risk less, make more. Maybe that's a good title for his show.
Should be like
shout out. All right,
tag.
last thing before we get out of here, I just want to throw up this little slide we put together, some headlines around these generative AI or these language models, and chat GPTs getting a lot. And look what's going on here, and this is really interesting. So Google's going to invest $300 million in OpenAI rival. OpenAI dangles perks at early access to win investments in AI and startups. I mean, just the list goes on. The chatbot startup character seeks $250 million. So we got a little bubble going on here, guys. Microsoft, they invested $1 billion in OpenAI. They're the ones who make this chat GPT. They're going to put it into their Bing. They're just invested $10 billion. It just seems like there is definitely a little bubble burst or forming here. It has not burst. Look at this C3 AI, and we have a 1-year chart. This stock was trading at 10 at the end of December, traded 27.5 today. Okay, so on the market cap, it's literally gone from 1 billion to 3 billion. More importantly, look at this thing. When it came out in late 2020, guy, in its IPO, this stock was trading. It's traded as high as, I don't know, 175 or something like that. And look at the move it's just had here. And I highlight this. Not saying to buy it, people. What I'm saying is just keep an eye on some of these headlines. When some of the big mockers like Microsoft and Google are doing things in this space, when they're investing in the private markets, it seems like it's a really good longer-term secular sort of story. Doesn't mean that things are trading in the markets right now that have the term AI. God, you and I've seen that before. Remember .com? You know what I mean? And there's a couple other names. Maybe they could pull up SOUN. Look at this thing, BBAI. Okay, these are like little small cap things. Again, not saying to buy them here, people. I don't know anything about them, but somebody's buying them. Somebody's talking about on a message board, that sort of thing. So, guys, when we start to see this sort of behavior at this stage of the game, what's happened with crypto, what's happened with some of these SPACs, what happened with some of these unprofitable tech companies, the ARK and everything like that, doesn't make me more bullish on the broader market.
No, and it's interesting. James just brought up a point in the chat, and maybe Jacob can pull this up. It's the last comment. But the move in NVIDIA, this latest, the last $30 or so might be on the back of exactly what you just talked about, Dan, without question, because that's a name we've talked about that is now NVIDIA specifically has doubled since the low we made in October. Think about that for a second. Doubled since that low, and it's still significantly, again, for context, significantly lower than the all-time high. But we're getting standard deviations away from the 200-day moving average. We talk about this stock. The reason why we talk about it, because animal spirits are back. NVIDIA was one of the poster child for animal spirits for a long time. A stock that's probably trading 50 times next year's numbers, probably trading 20 times or so revenue at these current levels. That just doesn't add up. Something's amiss. And we can talk about all the tailwinds they have, and they clearly do have some secular tailwinds, but at what cost? And doesn't the valuation it's currently trading at sort of encompass all that? And to answer your question, we've seen these things before, and we're seeing it play out right now.
Yeah, and just to put a bow on that,
the bow.
NVIDIA is a $518 billion market cap company. It's up 45% of the year. It's up 100% off the lows. And Tesla is $600 billion market cap company, up 57% of the year, up 100% off its recent lows, or nearly that. Okay, listen, do us a favor here, people. We want you to be with us at 11 o'clock on Wednesday. This is going to be, we're still doing market call at 1. This is the smart stuff that we're doing at 11 a.m. with our friends over there from FactSet. It's going to be a look ahead. We're going to be focused on earnings with butter. We're looking at energy. We're looking at ESG. We're going to pack it with some expert views and some trade ideas and some investment themes. So go to riskreversal.com/FactSet FactSet 2023. Sign up. You're going to get a link for that here. So just do us a solid. Come with us along for this ride here, Guy.
It'll be fun. Listen, I think there's going to be a lot of information that it's a good way to listen. We're a month into the year, but I think it's a good sort of overview as to what to expect over the next few months or so with the experts from FactSet. On top of which, I get to say Butters 3 or 4 times.
Yes, you do.
That day as well, which is pretty cool. So check it out. Please sign up. We're looking forward to it. It's coming up quickly. You see the scroll at the bottom of the screen. I love that. I mean, we have scrolls now too, which is fantastic. But Dan, that's it for Market Call. You want to just say goodbye before I take us out?
Yeah, goodbye.
Oh, there you go. Thank you. I want to thank the great Carter Worth. You, our audience, who are always with us. Through good and bad, thick and thin. And of course, thank you, FactSet Financial Data and Analytics, powered by Tomorrow. They're our data provider. Sign up for Wednesday's webinar, if you want to call it that, 11 a.m. We will be back tomorrow, just the two of us, like the song.
See you later. Thanks.